Hello and welcome. Alexander Shapiro reporting for another edition of CMS Forex News. Today is Tuesday, May 13th, 2008. In the UK, the RICS house price balance showed that 95.1% of surveyors reported that they saw lower housing prices. Though prices are lower, the survey does not convey how much prices have fallen, but rather how broadly the market is being affected. Also, last evening, the BRC Retail Sales Monitor showed sales falling by 1.5% compared to April of last year. It's the second month in a row that the indicator was negative and is a sign that consumers are less willing to spend. Overnight, the UK released consumer inflation data, which proved to be red hot in April. The annual rate increased 3%, with core inflation up 1.4%. Both figures were above expectations. Inflation was 0.8% higher on a monthly basis, the biggest increase in nearly 7 years. The Retail Price Index, which measures the cost of living used in salary negotiations, grew by an annual pace of 4.2% in April, the fastest since November. Following yesterday's producer inflation results, it will be interesting to see whether the central bank follows through on its planned rate cut for the next meeting. The pound-dollar pair was trading lower coming into the release. It rallied to touch 1.959 in a knee-jerk reaction, but paired those gains rather quickly. The dollar strengthened in the first half of New York trading as a result of better-than-expected retail sales from the U.S. The pair found support near 1.942, where it set an intraday low. Retail sales in the U.S. for April were down 0.2% overall, matching forecasts, but core retail sales, which exclude auto sales, rose 0.5%. Also, March's core retail sales growth was revised up significantly from 0.1 to 0.4%. Car sales fell 2.8% over the month and were the main drag on the sales figure. Import prices in the U.S. for April rose 15.4% on the year and 1.8% on the month. Annual rise was the fastest since records began in 1982. Petroleum led the charge, up a whopping 57% since last year. Excluding oil, prices were still up rather steeply, implying that a weaker dollar is making foreign goods such as cars and capital goods more expensive. In a third and final report, business inventories grew at a slower pace than expected in March, climbing 0.1%. Firms are trying to be light on inventories in anticipation of slowing demand. The retail sales data boosted the dollar-yen pair, which rallied 90 pips after the release to set a peak at 104.75. The pair then receded, finding some support at 104.3 in mid-New York trading. From there, the dollar strengthened again retesting its high from earlier in the morning. In the last two sessions, the dollar managed to claw back most of its losses from late last week. The pound-yen pair was pressured overnight as UK stocks performed poorly following its inflation report. The pair dropped 200 pips from its high yesterday. As New York trading got underway, the pound found support at 101.5 and rallied 200 pips the other direction, touching just above Monday's high. The euro-dollar pair was lower overnight and continued its decline following the U.S. retail sales data, setting an intraday low near 1.543. From here, the pair recovered and was consolidating near 1.55 as U.S. stocks were trading in the red in the morning, weakening the dollar. The U.S. dollar-Canadian dollar pair fell overnight, reaching parity in mid-New York trading. The greenback, like it has several times in the past month, found support at the 1-to-1 level and rallied to erase some of its earlier losses. From its peak on Friday, the pair was down 180 pips at its intraday low. Tonight, Japan releases inflation data for corporate goods and its current account balance. Australia will reveal consumer confidence data and its wage price index for the first quarter. Overnight, the UK revealed its unemployment report and its quarterly inflation report, while the Eurozone releases industrial data for March. Tomorrow morning, the US will post its consumer price data. That's all for today. Join us again tomorrow right here at cmsfx.com.